Tesla's earnings show the effect of the company's price cuts as operating income fell more than 50% from the prior year quarter, despite a 9% year-over-year revenue growth. The annual forecasts from the folks at Morningstar had already included the profit decline, as the expected price cuts would continue to weigh on profits and margins. However, they have trimmed their near-term forecast to account for further price cuts in the fourth quarter and lower margins in 2024 as Tesla ramps up Cybertruck production. Their long-term outlook remains intact, that Tesla will be able to fully restore automotive gross profit margins as the company is able to reduce its unit production cost and ramp up sales of its autonomous driving subscription software. Having updated their model to reflect their lower near-term outlook, they have trimmed their Tesla fair value estimate to $210 per share to $215 per share. Their narrow moat rating is also unchanged. Tesla stock was down in the post-market session of yesterday, the 18th of September 2023, and lost 9% in this regular session. All of these as a result of the market reacting negatively to the profit decline and the management commentary that suggests lower automotive gross profit margins next year, 2024. However, at current prices, shares trade roughly 10% above the updated fair value estimate. Accordingly, they suggest investors wait for a larger pullback in the stock and for shares to offer a solid margin of safety before they recommend an entry point. Tesla plans to begin Cybertruck deliveries at the end of November of this year, 2023, while ramping up production of the light-duty truck. Similar to the Model 3 ramp-up, they think automotive profit margins will likely be temporarily affected by higher initial unit production costs in the remainder of 2023 and in 2024. However, as production scales, the truck should become profitable and help drive margin expansion in the following years. So, yeah, this is what happened. This is what happened today, the 19th of October. So we have this is what's going on right now in this post-market session. At just before, around 5 minutes before the market closed, the stock spiked to $202, but $220, but has since continued to give up all those gains. So it is forecasted to even decline further, all the way down to around 216.63. This is the 1 minute chart. So the auto regression for its 10-minute chart is that it's going to decay further, but this is a 1 minute chart. It may not be of great value to you by the time you watch this video. So this is what we are looking at right now. This is the 1 day chart, so you can see that decline we're talking about. This is roughly a 10%, approximately 10% decline. So the 10-day moving average is forecasted to even continue to show weakness up till 250.27. That has already been the stock has actually declined below that, but there are strong indications that there's going to be a rebound. We're talking about a rebound to around $288.26 come the 30th of October. Is that possible? 228.26. That's the Fibonacci projection about that. So maybe 296.70. I might be sounding a little bit delusional by mentioning such figures, $296.7 by Monday the 30th of October. Okay, so but there are further downward declines, further downward projections here. There is a downward projection of 198.50. So I could say there might be a range of something like this, 197.5 all the way to 296.18. Okay, between now and the 30th of October. Okay, that's really ambitious, if not anything. So let's look at the 1 week chart and see what the projections are saying there. Given all that's going on right now, it's giving nothing positive on the weekly chart. Decline all the way down to projected to decline all the way down to 116.70. Okay, so but there are upper projections on this daily chart as well. 450.19. Below that is 435. Below that is below that is $360, 360.09. and then below that is 328.50. below that we have 330.92, and then we have here the 286.37, and then here we have 268.82. so let's look at a 1 month chart and see what's going on here. 1 month chart. Okay, on the 1 month chart, we're seeing something totally different as well. We're seeing that it's going to continue to show strength. It might decline further by by the beginning of November. It's expected that the projection is for its 10-month moving average of 213.19, but after that we are looking at 223. So all the way projected all to rebound all the way to 335. So 335.91 by the 1st of March, and then cool off again by the 1st of April to 295.01. so 295 also turns out to be a number we're looking at right now on its 1 day chart. $295 seems to be coinciding with that $295. That's the most upper projection we have here, 295.70, 296.70. so Tesla disappointed with 50%. What does it say here? It says 50%. It's a 50%. Let's say it says here operating income fell more than 50%, even though there was a 9% year-over-year revenue growth. So, and they are recommending here that they're saying that what are they saying here? The stock has at some point was trading at a 10% premium to their profit, to their fair value estimator. So okay, accordingly they suggest investors wait for a larger pullback in the stock and for shares to offer a solid margin of safety before they recommend an entry point. So see what you make of Tesla stock, and I'll definitely continue to update you. Thank you very much for watching this video.